Hi guys, welcome to my channel. Once again, this is Millionaires FX, and today I want to welcome you to another great opportunity, another great session. Um, my name is Nice Henry, and I'm going to be walking you through the process of the trades that we took in the course of the week. But before then, we're going to talk about one of the problems that most traders are facing in their trading journey. So, and that problem we're going to be talking about today is the concept of overtrading. So, I want you to be ready. Get your pen and papers. Be ready because I'm going to try to make this as short as possible. But before we get started, a quick disclaimer: this video is not a financial advice. It is only an educational content, so I want you to treat it as such. Trading can be very risky, so you must do your due diligence before you decide to invest, because trading can be very risky. So once again, I want to encourage you to subscribe to our channel to get more valuable content like this, and also I want you to hit that notification bell and give us a thumbs up if you like it. You can also drop a comment and we'll try to respond to your comment as soon as possible. So let's get straight right into it, into the job of today. So what is overtrading? Overtrading is as simple as it is. Overtrading is overtrading when you take a lot of trade in the course of the day. Maybe you're a day trader or you're a swing trader or a scalper, but this problem always happens mostly with day traders and scalpers. They don't know unconsciously when they take more trades than necessary sometimes, and because of that they are having a lot of losing trades in the course of the process. This could be very dangerous, because a lot of traders, you might have done everything that you've done, everything that you're supposed to know. You have a sound technical analysis, you have a good money management plan, you have a good trading psychology, but you still find yourself losing trades at the end of the day. I want you to start looking out for the problem of overtrading. Okay, this is one of the problems that is creeping into that is unconsciously creeping into the hands of traders, and they don't understand how they get trapped in this overtrading cycle, where they find it very difficult to get themselves out of this problem. So today we're going to be addressing it without wasting much of your time. So if you're overtrading, why do we overtrade? A lot of people are overtrading because they are impatient, they are impulsive. They are impatient, they are impulsive in the market, because sometimes they see that the move is happening, the market is trending very strongly, but it did not follow your plan. You did not plan a trade, it did not follow the process of your trade plan. Okay, but you've seen that, okay, this market is just going, it's just trending, there's momentum in the market, and then you want to jump into this market. This could be very dangerous for you as a trader, really, because it could actually backfire on you. If you jump into that trade, you do not know, because you did not plan the trade, it is very easy for you to be getting into a falling knife. So this is number one reason why people overtrade. Overtrading is one of the problems that amateur traders always find themselves doing. So from today, you need to pay attention to the problem of overtrading, and begin to look, look closely to it. So how do you solve this problem? You have to choose to follow the process. Okay, you need to pay attention to your process. That's what's going to give you the long-term results that you want to have as a trader. You want to follow your process carefully, religiously, and forget about impulsive trade. If you see a trade that you didn't plan and it is happening, it is not within the trade that you've planned to take, I advise you to stay away from that trade, because you might be venturing into, you might be trying to get into a falling knife, and you just get chopped off like that. So you need to follow the process and forget about your impulse. Follow the process. Stay calm. When you come into the market, you have to plan a trade. Okay, you begin to watch the market behavior and you begin to plan a trade. Okay, and begin to wait patiently for that um for it to happen. So, and it is very, very important for you to be patient. Okay, very, very important for you to be patient in the market. When you get into the market, you must be very, very patient, relaxed. You don't have to be tense. You must be relaxed, because you have a process. You follow your process. When the opportunity comes for you to take that trade, you take that trade and you kill it and you walk away from the market without looking back. That is how professional traders trade. That's how consistent traders trade. But when you're going into the market, you're chasing moves up and down, you're seeing this impulsive move, and then you want to catch the retracement and stuff like that, and it could be very, very dangerous. It doesn't matter your level of skill. You must be very, very willing to pay attention to the market. Okay, you must pay attention to the market. You must be very, very patient, so that you can be able to allow the market to come to you. Let the market do its thing, and when it's time, you will know that it's time, and then you go and execute that trade like a professional and walk away with your profit without stress. So that is it, guys. Overtrading kills your account. Okay, it kills your account. Sometimes there's something that happened to some traders. You might be taking small loss. Maybe you get in here and you take a small loss and you get out. You get in there, you take a small loss and you get out. Before you put the losses together, your account is already destroyed. So, and what it does to you is that it keeps you in a frustrated cycle of continuously trying to revenge the market. Okay, guys, because when you overtrade, you're gonna get chopped off slowly, and before you know what's happening, your account will be destroyed slowly. Okay, guys, so I want to let you know that most of the good trades doesn't come at the beginning. At the beginning, there's always manipulations. The good trades usually come in the middle or at the end of the day. Okay, it comes during the end of the day. What I'm talking about is like maybe the New York session, or maybe after the New York session. Most of the good trade might come lately. So this week was a Fed week, and it was very, very crazy. I think until Wednesday it was very, very crazy. I think it was on Thursday when we started to see some volatility in the market, even with the news on Monday. Throughout the week there was news on Tuesday. I think on Tuesday there was a news, and then on Wednesday there was a news too. So there was a news, yeah, on Tuesday. I think on Tuesday and Wednesday there was a lot of news in the market on this week. So because of that, the market was actually behaving very funny this week, which I'm going to show you guys in the chart very soon. So, but if you can be able to plan your trade, you're going to avoid some of these false moves that you see in the market. So I want to encourage you from today to begin to choose process over impulse. Choose to follow the process of your trading plan. Follow the plan your trade and trade the plan. Okay, and avoid all those trades that you take based on impulse. And how do you do this? It will help you to do this if you begin to journal your trades. So from today, I want to encourage you to have a journal. It's going to help you to track and see at the end of the day how many trades did I take. And I'm not talking about the journal you take after the trade must have been done. When you are taking the trade here, I want you to be writing something down. Can you be taking some notes as you are writing down your state of mind? Why you took the trades, and after you close the trade, you want to write something down. A short notes. This is going to help you to real time to actually narrow down where the problem is actually coming from in your trading. You don't want to take this advice very lightly, because this is exactly where the problem is. Overtrading kills your account. It destroys your account over time. So from today, I want you to begin to plan your trade. I want you to begin to trade the plan, okay, and avoid impulsive move in the market. That the market is moving, you just jump into the market. You don't have to catch every move that happens in the market. You need to avoid those moves and begin to wait for the market to do what you want it to do and come to you. If it doesn't do it, you walk away and sleep well at night. If it does it, you take advantage of it and you catch that trade. At least, even if you fail, even if you miss that trade, you know that you follow your plan. But trust me, over time you're going to have a great trading results if you continue to choose to follow your process religiously and avoid most of those impulsive moves that you're trading in the market. So I'm going to take you to the chart right now. Let us do a little bit of review of the trades that we took within the course of the week. Okay, guys, and let me show you the trades that we caught and the one that we lost in the market within the course of the week. Let's get into the chart. This is gold, and on Monday gold opened and worked its way down to create this this low, and then near the resistance. Okay, and the next day the market worked its way to the resistance and fell back to the low. From the low the market went into consolidation, and from there the market worked its way to this high, to the resistance. I thought it was going to break it. I was actually targeting somewhere here, but the market did not get all to that point, and then we got this nice 1:3 risk to reward ratio trade right there. And the next day the market worked its way to this low and then went into consolidation. I was expecting a bullish move that is to break Tuesday's high, but the market refused. This was an inside day, so I wouldn't I wasn't expecting much in this market. But actually the markets actually gave us a lot of false move, of which after I tried it the first time when it tried to break out, it went back inside, and the second time it gave us a nice 1:1 and then reversed, and then we took profit like that and walked away. So but on Thursday, sorry, the markets walked its way back to that high during the news. I think the CPI news, and then the market fell nicely and retested this low from the previous weeks ago. So then the market on Friday, the market walked its way back to that high, and when I saw that the market walked its way back to that high, I was waiting for that breakout to happen, and when the market broke out of that um short-term trend line, I took that sell and targeted the low from where the move started from, and we caught a nice 1:2 risk to reward ratio, 1:2.4 risk to reward ratio trade there. And on Nasdaq, we didn't get much trade on Nasdaq because I was very, very skeptical to take trade, because the first trade we took on Nasdaq, we only ended up at break even. And on Tuesday we tried to trade again on Tuesday after the breakout, but the reaction was crazy. After we took the sell to the downside, the market reversed on us and we took a loss on Nasdaq on Wednesday. So because of that, we stayed away from the market that was on Tuesday. Because of that, on Wednesday it was an inside day. We did not take any trade, and on Thursday we saw this move. We saw it tested the previous day high, and from there the market fell nicely, but we didn't take the trade because it was the heat of the news. So I would have been able to get the reversal, but I wasn't paying attention, and then the market reversed without us. So, but I did a little bit of scalping on the reversal to get a little bit of pips right there. But on Friday we caught this nice move when we got the market break the previous day high, and we took that long. When we saw the W pattern, we were targeting if the market was actually going back to where the move actually started from on Friday last week. This was the level I was targeting, but guess what? The market did a 1:3, sorry, and then when I saw the W pattern, I thought it was going back to where the market started from. But when the market got to the 1:1 and begin to reverse, we took profit, and then we took a sell and caught a nice 1:1 right there. So we also caught some nice trade on GBPUSD on Monday. I took a loss on Monday on GBPUSD where we tried to trade a breakout because it was in the consolidation throughout, and then instead of breaking out, the market pulled back, and we took a small loss on it, and we closed the trade with a small. But the next day, on Tuesday, the market gave us a nice 1:2 risk to reward trade right there. After we traded the break and retest, after the breakout and retest back, we took that nice trade and we caught a nice 1:2 risk to reward ratio trade there. But on Wednesday, we caught this nice 1:1 also. I think 1:1 sorry, but we're targeting 1:6, but we got about 1:4 there, and the market reversed and we took our little profit like that. But on Thursday we didn't take any trade on GBPUSD, but on Friday we caught this nice trade where we were targeting this the market retested the previous day high and then went into consolidation, and then we waited for that breakout. When the breakouts happened, and then we waited for that retest, when it pulled back into the 21 moving average and failed and started to fall, we took that nice trade there. But it was a nice 1:1 only, or 1:2 risk to reward trade right there, because we couldn't wait for that pullback to happen. So we just took our profit somewhere there and allowed the market to continue easting. So same thing happened on Euro USD. We took a small loss too on Monday on Euro USD, but on Tuesday we caught a nice 1:2 trade right there on Tuesday. On Wednesday we took a small loss on Euro USD because of the first break. It was an inside day. Nothing happened in the market that day. But on Thursday we didn't take any trade. But on Friday we caught this nice 1:3 risk to reward ratio there, and it was a great trade because the market went back again after giving us about 1:2, but it was still okay. But on AUDUSD, we caught a nice trade there. Look at this nice breakout trade on Tuesday. We caught this nice breakout trade on Tuesday when the market worked its way back to that resistance. We were trying to see if it was going to break the resistance, but it failed, and then we took profit. And the next day we tried to get this nice trade, and the market failed again, so we left the market at break even. But on Friday we were able to catch a nice great fall that happened when it broke Tuesday's high, and then went into consolidation. Immediately we were waiting for it to break this structure. Immediately the structure was broken, and then the retest of the structure, you can see how we entered that trade and the market failed. It was a nice one. It's to 4.26 risk to reward ratio trade there, guys. This was all the trade we took within the course of the week. I hope you have learned something from these videos. We always trade from the levels. What you're paying attention to is the price action and the levels. We don't care about some of the things that is happening in the market, because we are not the market maker, but we care about the levels because we know that the levels will always hold. We have our area of interest, our level of interest. That's where we are looking at, that's where we are targeting. So that is it, guys. So we are always looking at the levels. We pay attention to the level. We don't joke with the levels. We don't joke with the price action. And more importantly, if you pay attention to our trade, you will learn a lot. So join Millionaires FX if you can. The link to our free Telegram is on the description below. Give us a thumbs up, subscribe to our channel, and give us a notification. I'll see you on the next one, guys. Have a nice week. Have a nice trading week. See you on the next one. Have a nice day.